0% interest business credit cards for 6 to 18 plus months, up to $150,000, if not much more than that. That you can liquidate the cash out of these and use that for what you need for purchasing property, rental investments, fix and flips, commercial. The list goes on for a down payment, for paying off other property debts, and many more uses, like on the business side for fueling growth and expansion, inventory, marketing and advertising, payroll, utilities, rent. The list goes on. But basically, given free money that you can use at 0% interest for that time period. But more importantly, I'm going to be getting into how to build out your credit as well as rebuilding it in case you are in that phase. So we will begin with certain cards to go after if you're trying to build out your credit profile and you have bad credit. What could that look like, and what could that then evolve into when we're doing 0% interest cards? So please stick with me until the very end of this video so you get all the juicy pro tips and much more. I recently did a video like this on Instagram. I went live. I don't think Instagram allows you to download live broadcasts, or you can't do it right away. At least I didn't see that feature, or perhaps I missed it or they removed it. So I'm here giving you more of a quote unquote quicker version to this, and all of this information and more I'm going to leave for you in the description as well as in the bio. And before I get started, my name is Michael with Viral Funding Solutions. I'm a business funding expert. You could also say a business loan broker expert, underwriter / pre-underwriter, where I look at a lot of documents. I'm very analytical, cerebral minded. I'm an introvert. I'm a Libra. That says a lot. We're very loyal. We are more well balanced, you could say. I'm more of the intellectual type, cerebral thinker. That's just how I grew up. And so I like reviewing a lot of documents, and that's what I do day to day. In my mornings, I'll review a lot of documents from different people, yourself, and going over bank statements, tax returns, P&Ls, whatever I need to look at depending on the service and where we then evolve into. And I can connect you with the best lenders and underwriters that are out there by far, and that I work with them every single day that I've vetted. And so you're just not having to go out there and use the whole spray and pray method, applying anywhere and everywhere, because that can only get you so far. It does more harm than any good. Now you've dispersed this information out there. They're probably pulling your credit multiple times. Even if it's just a soft pull, you're unaware of it. You're getting your information distributed to a lot of different third parties, whether you knew it or not. And you just don't want those practices. You don't want it to feel like you just go into an email and go, I just got tired. I just had to choose what's most convenient for me, and went through with it without getting the max amount, best terms and rates, whatever the services are. And I always go through the 3 C's of capital: credit, cash flow, collateral. And then there is also business trade credit. As a startup and as a non-startup, you should be building that. So you either have one of these 3, 2 of these 3, or all 3. And I look at maximizing your potential around 1 and multiple. So I don't speak a lot. I'm doing this here just because I know it's of value to you, and I know you do care about getting this information in your hands. So I'm going to cover this, and I put up a document that I put together through my experiences as well as helping many others out. So this is all tried and tested. It's factual stuff that works right now, that's worked out in the past, and what could work also in the future. And so I'm going to use this as guidance. I really don't need to look at it. I have it really, it's all up here, to be honest with you. Sometimes the market changes, but I'm using it as a point of reference, and I don't miss these number points as we go through this video. And very quickly before that, you're probably asking, why me? Well, besides Viral Funding Solutions, why Viral Funding Solutions exists, for one, is there's too many online marketplaces. There's too much noise. You go to the wrong people and providers. You make mistakes after mistakes. You're unaware of what you're really doing consciously on a subconscious level. And at a point when you get there, it could be too late. Now you're trying to shuffle, trying to pay off other things you shouldn't have taken, and you didn't get max amount here. You didn't get the overall education on a well balance of all of these different services. And I work with all of them, startup funding all the way up to SBA and everything in between, structuring the business, helping out with cash flow management, profitability, EBITDA, and other ways of helping your business flourish, having the right plan together. I do a lot more. And I run a digital marketing agency, lead generation business, health affiliate marketing. I've been doing that for a long time, helping people with vitamins and supplements, ergonomic desk chairs. You have seat cushions. I have one right behind me, one that I'm sitting on, and a lot of other parts of it, other verticals in the affiliate space. I did a hybrid with the e-commerce for a little bit, went back to the blog thing. I have other ventures. This has been my primary focus as a business funding expert for quite some time, and I work with people every single day. So I want you to know that, and I'm most loyal. That's something you don't have to worry about. I'm very trustworthy and reliable. I don't speak a lot, I do more. Right now you're seeing this, but when I'm not here, I'm doing a lot of stuff in the mornings throughout the days that I have to be very, very focused on specific tasks. So here I have this document. I'm going to try to give you again the shorter version because I tried making one before and I don't think it's allowing me to, or it's just buffering, or it's taking forever to actually allow for a download, but that may not happen. So here I have this document that I want to go into for bad credit, let's say, or you're trying to establish a credit profile, or you're just trying to rebuild your credit. That's where I want to begin. And then again, I'm going to give you some of these details at the end of this video for the 0% interest cards that we can try to stack on top of one another and what that could look like. So quick few points that I put here. If you are trying to rebuild your credit and you're starting from complete scratch and you're wondering, well, I can't get approved for any of these bad credit business cards, or I can't get any bad credit personal cards. And there are many of them that you can turn to that would work. Just trying to use a revenue business card, a Credit One Platinum card, or anything else out there, a Platinum Secured card. That would be the way to go usually when you have bad credit, to add a deposit. And that's where we're going to begin with a lot of this. So number one, aside from unsecured cards, you have secured cards. And again, I'm using this as a point of reference, but for one, many of us are looking for those cards that we can get issued, Capital One cards, the Spark cards. I'm trying to get an Amex card, a Chase card. I've tried to go to a Bank of America. I've tried to use a Brex. I've tried to use one of these other ones with Divvy. I've tried to go all over the place trying to apply, and then even for community credit unions, regional banks, and the list goes on. And so the best way to approach this is by asking, how much first do I want to build? Where do I want to get my credit at? And more importantly is, why is my credit where it is? If you don't know where your credit is and you don't know why it is where it is, how are you going to know what you need to improve, what you need to fix? So aside from all of this, you have to start off with, have you seen your credit report and or reports? That's primary number one. And if you don't pay attention to that, let alone on the FICO, SBSS, Business Liquid Credit, Paydex Score, and this stuff, on the business side, if you don't even track the personal side, that'll show us a lot that you won't even go into tracking the business side, or don't know what you're building, or haven't built anything, but how do you do it? That's another matter. So we can get into rebuilding business credit, helping out that bad credit business profile to get you ready then eventually for business credit cards. So one card that I would like to turn to, and one that you potentially could look at, is a secured card from Discover. The Discover It card, available or not at times, that's a good business card to use for a lot of things you need to put on your business. And that will allow you to add a deposit, more of a security deposit into the account. So a minimum, I would say, of about $200. And in a market like today, and what I tell everybody to deposit in one of their accounts, or multiple, if you have multiple banking institutions, let's say, is add a security deposit or an initial deposit of at least $500. And that's not usually a lot to ask for, Certain people, it is harder because you already endure a lot on the personal side. You barely have any left over to pay the rent and bills and all this other stuff you need to do, and then you have to owe other people. Now you got a business, and is the business flourishing enough? We don't know yet, or there's not enough of a track history or record or pattern recognition to know all of that. So I would start off with like a Discover card that turns secured into unsecured. And you can go from secured to unsecured in a matter of sometimes 6 months, I've seen, but that depends on the track record and the history, as well as how often you use that, the utilization. But more so realistically, in about 7 months in this market is what I see going from a secured card to an unsecured card. And another thing too that I address here is a lot of people want to turn to Capital One cards, the Spark cards, or the ones with lesser or fair subprime credit, or even lesser than that. But then they evolve into their higher tiers of 700 plus, 750, 800 plus range. You don't have to worry about that now if you haven't even started rebuilding your business credit. And very quickly, there's another point when we talk about bad credit. If you're in a point or a position now where you can't put a deposit in and you can't get approved for these bad credit business cards, you're too over leveraged. Even if you did get something, it isn't enough for you to pull the trigger on and think, I can move forward with this. And you're immediately thinking, I need to get my credit repaired. I need to get this reporting to the business credit bureau so that they can take a look at this over the course of 30 days, 30 to 60, 90 days, and they can make an inference and they can make a final decision to get back and say, this is what we can do after disputing this, then that. So if you're interested in doing any form of credit repair, I'll leave you information down below in the description as well as in the bio. Check that out. But the best place to begin is my free business questionnaire form. This is what everybody fills out. If you fill this out, you'll get a very highly personalized and customized email response with the PDF usually attached to it, showing you your best funding option and options, thoroughly broken down detail per detail, whether you can or can't qualify for those options. At least you'll know what is there. And a lot of this information is not publicly released. So you can bet that what you are going to see, you will even disqualify and qualify yourself just by looking at that. And a lot of people love it. You can reuse it, come back to it time and time again, but I'll position what is the best approach for you to do now. I'll even have a conclusion and a roadmap on like, okay, we're here now. Then this is where we can evolve in about 2 to 3 months. You're not quite there yet. Or we can do this in about a week after this because there's a soft pull. Then we can go after a hard pull on this program. There's different variances in how you do that, but you will never know until you take that approach. And don't waste your energy or time, not even mine. So if you are serious, please fill that out. I do take my time analytically, cerebrally every day to go through a lot of these. And when I'm not here, like I said, I'm looking through documents, I'm looking through bank statements, tax returns, and I'm also going through and giving those responses out when I have that time to. So the Capital One cards, and there's other cards that are out there. People like to think those are the ones to turn to when there's no immediate relief yet. There's no immediate payoff. And why do people get declined? Because a lot of the times you see with Capital One cards, you have to be strategic and where they're pulling from the credit bureaus. A lot of the times they pull from more than 1, 2, if not all 3 credit bureaus. So if you're already trying to get higher leverage, yet you have low leverage with your current history, your payment history, it's one thing to have late payments. It's another thing to have these derogatories, bankruptcies, foreclosures, Chapter 7, Chapter 13. Now you have accumulated so much, no matter how small or how large it is, you find out a lot of the times why you get declined, especially for ones that you don't secure with a deposit. And so with Capital One, although there is leverage there, I would recommend those for those of you who have more of a fair credit score range. We can build up into that after the Discover cards or in conjunction, but normally not. So Discover into Capital One Spark if you don't have that, and there's a few other cards with them. And a lot of the alleyway you get, especially with Discover cards, on 2% cash back after 1,000, I believe it still is, on gas and for restaurant spend. It's quite a bit. And then there's other rewards. So with a lot of these cards, you also want to look at like, what are they giving you in terms of travel rewards, discounts, cash back. It does not primarily have to be driven based upon that. You have to make the right decision on how to get the amount that you need. And more importantly than taking anything is what? Making sure you know how to apply those funds. When you look at getting these funds, do you know exactly what they are going towards? Are you using this as good or bad debt? Do you have your ROI from it? Do you know your current margins, what your margins would then be like? Do you know what your gross profit margins are? What they could evolve into? Do you know what your net profitability as a result of all of this? Would it be directional or not? Would it be having an inverse effect? So there are a lot of circumstances that you need to understand that if I take this money, I'm not sure about because my rent will increase, or I'm going to increase my payroll here, or I'm going to have to renegotiate contracts, I'm going to have to free up cash flow in my inventory that's tied to that. I didn't see that before, but now I know what to do differently. So there's a lot of different scenarios. Those are just some of them. So with those, that's kind of the reason why in your credit profile might already be adequate. It may be too thin and not credit worthy to have that relationship with those cards. And so you wonder why you don't get an approval or you don't get enough of it. And there's more that factors into those approvals. So I go in here with the Discover Secured card to start, that then unsecures for about 6 to 7 months. I see a lot of the time 7 months in this market. And then after 90 days of your increase, ask for more. So what you could do after those 6 to 7 months, you unsecure it, you ask for a credit limit increase 90 days thereafter, a lot of the times, or even then in some cases. But what then happens is you can get that increase jump. So if you already had, let's say 500 to play with, 1,000, 2,500, the more, the better, the more the second time, there could be more issued, especially when you're unsecure it. And so let's say you already fell within that 10 to 20K, which is average. Most people who get 10K to 20K, and I'll go to the comments here soon, appreciate you guys. I'm trying to give you guys a shorter version from what I did earlier, but this is going to be very helpful for your education, and I'll get into the cards momentarily. But most approval ranges, and I'm going to get into a Chase scenario soon. And so a lot of the times I see 10K to 20K to start. And we have to also see what you have on your personal side built. So whenever I'm working with people and I have to understand what is present on their personal credit, what's on their history, what shows, what doesn't show, what got removed, what hasn't been, where are they in terms of what's their highest limit, how do we apply the highest limit to get more on the business side, to get even an increase on their personal side, start with their oldest age card, work our way that way. And I'll give you guys a little bit of quick tips on that as we move forward with this. But that's how I would do it, credit limit increase. And then every so often from there, you can then request more over time. So now you're bundling 10, 20, 30K, you're moving your way up the ladder. And if you had other cards to work with, then you can make a better decision on how you use them and what benefits you get and all this other stuff you can try to wrap in. So here I go into number 2. While you have a secured card from Discover, then you can go for a credit union like a Navy Federal. There are many other ones out there. I'll list some of them towards a little bit later, but as one example, Navy Federal. And you can do a similar process. They work a little bit differently. I don't want to get into all of the parameters on that in this. I want to go ahead and speed this up. But you can take something that's secured and then turn that unsecured. And that'll allow you more freedom to work with. And then if you have about a couple of cards that you can play with, then you can kind of distribute where you're going to be allocating those funds, what card or cards are you going to be using, which one's your higher usage, which one is best that you use overall. And then you have the relationship in the door. It's like going to these higher banks. You want to have a relationship already. Some of them you don't have to. I'll get into that in a little bit. But if you can go into one and you say, let's say, for example, Chase, that's my primary bank. I have others. But if you go to a Chase, what you want to start off with, and this is what I did, is after opening my accounts, and this is way before I had the whole business side, I had a personal credit card, I have multiple, and then I evolved into that. I had high enough limits on that side that it helped me with my approvals, especially getting those business credit cards and having a deposit to put into the business checking at that time and more. It only evolved. So having that in the door really helps you, and there's going to be certain card providers that want you to have that. I'll get into it in a little bit more here in a second. So Navy Federal would be a great one. So again, like I said here, you can repeat the process, secured that turns unsecured in time. And there are more products with a Navy Federal. So it's some of these other credit unions that would you be able to leverage, especially in this market. And there are ways to get in. There are ways that wouldn't work to get in. So you're not having to get yourself into problems and what you can leverage. But some of these products and these providers can get multiple products at once, even do one inquiry with certain community credit unions, and you can do 1 to 3 products all at once. And also I'll get into a little bit of that even more later on. So after you do this, you want to repeat the process to increasing your limits as you're doing that with multiple or one. And then I would go for a larger tier bank like a Chase or a Bank of America. Now, this is the whole, let's work our way into getting our credit established. We don't have any history, or we just have bad credit and we want to rebuild our business credit, or rebuild our credit, we should say here, especially on the personal side more than anything. And so at that moment, you're starting to become better at leveraging that credit that you have access to. Now, the problem that most people have is that they're not patient enough. You're not patient enough to wait 3, 6, 9, 12 plus months to get to the amount you need to get to. You don't want to go through a secured card that turns unsecured, or a secured card that doesn't, or you just want to start off with an unsecured card, but you know you can't because you have bad credit, and some of the times you can, other times you can't, and you won't get enough of a limit. The thing you have to understand is this is a process. So with an unsecured card, if you weren't able to get that limit or turn something secured into unsecured where you could do that faster and then get the ball rolling much faster, that would be a high leverage point. But if you're coming from a higher tier, then that's a whole different story. Looking a little bit down, how do you progress up, if more? So you have to understand that this is a process that not many people want to take the route on. But if you're asking, what should I do? Is credit repair a quick fix? Not always. It can be, but that doesn't fix your primary trade lines. Does that fix your accounts? Does that give you enough revolving accounts? And I'll get into some of the stuff, especially if you have no credit history, and I'll get into some other locations, but let's keep focusing on this part. So a larger tier bank like a Chase or a Bank of America, after you've increased your personal credit to 680, if not 700 plus level, in this market, Like business lines of credit through Chase and other banks are much harder to get. Like 751, 750 plus credit. A lot of the times you're going to see in this market, it might shift over time as then you're watching this, but it's in a hard market. Not everybody's going to get approved. There are more factors that they're looking at to make sure that they can issue you that credit. So everything needs to look clean, especially at a higher tier bank level. Not to say that at a lower you shouldn't, but having your LLC, having your articles of organization, your Secretary of State you're listed in, you have your EIN letter that you can prove. These are little things they're going to want, especially on the 0% interest business credit cards. On the business credit card side, more than anything, when you're going down that route and it's no doc, there is a stated income, no doc, projected income you can add type of funding when it comes to 0% interest business credit cards a lot of the times. And then there's others too that are non, and you can go into that. And I've created content on 0% interest business credit cards. I'll try to link you to down below in the description, and I can share it with you in time. But that's a whole nother subject of its own that I've already covered, and I'll combine that a little bit in this one towards the end of this. So you want to have a pristine credit score. I normally want a 720, if not 725 plus credit score. And you just have to understand what bureau or bureaus they are pulling from, because that'll give you much more leverage to then better determine what banks, what credit unions, what regional banks, where do I need to turn to? Is it geographically location/area targeted? Is it not? And so each one of them has different ways of approving, and from different states, it'll pull different credit. But there's some that are just the majority of the time you're going to see Experian, like a Chase Bank normally will do. Bank of America is a little bit different. I'll get into that in a second. But have a high enough credit profile at that moment. If you needed to leverage a credit partner, if you don't have good credit yourself, another great advantage if you're asking, hey, Michael, I want to get credit cards on the personal and on the business, for potentially personal loans, personal lines of credit, so I don't have to always leverage my HELOC, or I can use this to do a balance transfer, pay off some of the HELOC. There's a lot of little scenarios that we can look at depending on your needs. So then we could say, do you have a credit partner? That meaning, do you have a friend or a family member? It could be maybe a coworker that's not a friend exactly, or it could be a business partner. Are they willing to help? So at a point, it depends on what kind of credit, what is it, a loan, is it a revolving? Then we'd have to look at it a little bit differently. But if you have a credit partner who is saying, hey, I'm willing to help you until you get your credit better, or if it's not at that point, or then there's a balance transfer on credit, okay. But are you paying them a percentage of your profits? Are they going back to the person that helped you? Do you have a restructure or a structure set in place where, hey, they get to earn a percentage, they get to earn off of what I make here? Are they okay with doing that? Are they like okay with saying, you don't have to, I just want to really help you? You just have to structure that in a specific way. And there are many other scenarios to do that. So make sure your credit gets up to where it needs to be. Credit repair, as I stated here and I said earlier, if you guys need that, I'll leave it in the bio and in the description. And another thing that I want to mention is I very much value my energy and time. As yours, I do too. I'm very consciously aware, as I'm an observer more than anything. I don't talk much. You see me here, I'm trying to get through the material, but when I'm not here, I'm doing other things and I'm really listening more than anything. I'm not a talker. And so with me, you don't have to worry about being pressured. I don't even like to use the word sales. I'm not even directly in that. Like, we're all selling each other at a point. I get that, but I'm not here to do any of that. I don't have that background. I went to school. I educated myself. I played Division I soccer for a little bit, studied a little bit of sociology hand in hand. And I had then studied chemical engineering for a little bit. Chemistry is my favorite class. Very math system, chemistry, scientific driven. And so I thought I'd become a chemist at some point before I got into other verticals. And so eventually I wanted to start a business. So I got into the whole business administration. I got into that whole side. I've worked in construction, manufacturing. I've worked out into the field, and not just in the cubicle space. I was actually in the field, in the manhole sewer, bringing out tools, getting into the sewer lines, getting into an actual machine as a machinist for a little bit with my dad in the company that we were under, working with my uncle before that in construction, working in warehousing. I was a ramp agent at some point, having to go on unemployment benefits again when I was in a financial logistics position that went under, that I was working for a huge contracting company servicing HP and P South. And I didn't want to feel like a failure. I didn't want to have to go when we had a meal that I couldn't even split it 50-50, let alone I could pay it all myself. And I knew when I could and I couldn't. And I didn't want to feel like I was dragging anybody down. And that's not a good feeling at all. And so I wanted my situation to change. So luckily in that financial logistics position, I got caught up with a friend of mine, messaged me on Snapchat. I don't really use that as much anymore, but we connected and he told me about a lot of other things, starting a business. And that's the long story short of it. Eventually I got into that world and have evolved since then. And more or less is what I said earlier today. But with that said, you want to have that before opening up an account with Chase or other top tier banks, Bank of America, US Bank, and many others. Make sure you have your LLC, like I said, have that established. Or when I say established, with those types of banks, it's better to have, honestly, 2+ years time. It'll be most helpful. But there are other ways, especially with this is no doc, 0% interest, startup friendly. But with certain banks, yes, it's better to have 2+ years. Banks of America, of the world, you have the Chase banks, others out there who would require you to have that. Not these exactly, but others would be better to have 2+ years. If they don't even require it, it's best to have 2+ years seasoned. And then they look at other alternatives, as if it isn't seasoned, then they're going to look at another few key points. But making sure you have that is a very good starting point as a startup, S Corp, C Corp, however your operating agreement is also set up, as well as you are a registered agent. And within that state, everything is needed to be there, public records. We can look things up if we had to. And you have the business website, the business address, all that stuff I won't cover right now. But if you would like to learn more about it, I'll leave more information down below, especially in my free business credit building video series. Pick that up like many others have. You'll get video by video from me, showing you and walking you through these different parts. I'll even give you added material you can pick up where I would go get a business website, business address, how to set it up correctly, because there's a lot of misinformation out there. Getting the right NICS code, so you're in a specific high risk field, but you don't want to add more by the DBA or the whole business name and a few other components, especially the address. And like trucking and real estate, you want to make sure you do things that are more like a consulting, property management, a few others, enterprises. The list can go on and on, but that I'll leave more for you down below. So LLCs really do help, and they maximize the approvals, especially with larger tier banks. You want to have that in hand. Will really go a long ways. EIN letters and more when ready, if possible. And I collect a lot of this stuff. I review individually, myself and or with my team. And if you need help with any of this stuff, like I said, again, I work with all tiers. I work with a lot of real estate investors as well, doing a lot of fix and flips, rentals, the list goes on, and why that's better, hard money as opposed to conventional, because you look at ARV and what's blended into that. And you also look at the property purchase and how much you wouldn't have to put down, as well as what the overall total cost with certain parts of it are on the front end. And so you are relying on a lot more speed to get that done, and underwriting that is more streamlined. And there are a lot more benefits to it, but that's for another time. So Chase pulls from Experian primarily, but it's also based on your geographical location area, as I said earlier. So you'll want to look that up within your states, but a lot of the times it'll be Experian that it looks at. So what I would turn to is the Chase Inc. card at 0% interest for 12 months. And there's multiple amounts and different ones, and get great cashback rewards just to get started on that. If that's your entrance point, or you've done this in the past where you've had other cards and it's allowed you to do that, how often do you use them? Because when you get cashback, the good thing to this is just imagine yourself having enough money at the end of the year, 10,000, 20,000, whatever that amount is. What would that do for you? Whether you put it back into the business, or there are other ways where, hey, I'm willing to take a vacation to take my family to Disney World. I can take them to SeaWorld. I can take them to another part of this country. I can take them international. We can go have fun. I can go kick my feet up into the sand as I have my adult beverage on my right, and I'm laying down clearly on a bench with my sunglasses on or not, and no stress, no other thought. No need to think about my business, or that I have to be in it. Oh, I got to be checking my phone every constant second. Instead, you can look out into the sun as the sun sets, but it's still so hot outside, and it's such a nice look that you don't even take your eyes off of it. There's no distractions. Even though there are people around you, your spouse, your kids, whoever it is, friends and family, you're just so concentrated on something, and you're like, or you're there, but at the same time, you're in the moment. And so you don't have to worry about those things. Take more time off for yourself, work off on the outside of the business, not on the inside entirely. And you get more of that freedom, as you say, or more freedom of energy, more freedom of time. You get to earn more in your business over time and then keep moving it forward. So what I would say is have at least $500 in the account you open. So let's say you're going to a Chase Bank or you're going to a Bank of America or any of these. I would ideally put in $1,000 and above. If I were to restart this over, it just depends on how much money you already have and how or where is this money coming from, because you don't want to over leverage. You don't want to have like too much overhead here and you don't have enough money in your account sitting here on your business, and for a day where money's getting taken out or it's at the end of the month, but you're trying to prepare more financially, like you have to understand that risk. You have to understand what's coming in on your personal side. If not enough, then what do you need to do? So that's one thing I would go for $2,500 and above to do this. But $500 of a deposit inside of that account shows activity already starting, whether you're withdrawing already the same day or not. It at least shows that it's in the account. And as the activity revolves or it unfolds, and I see a lot of bank statements, just so you know, every single day, guys, I look at bank statements. Like my bread and butter are documents. I look at all this. I look at the P&L balance sheets. I look at the cost of goods sold, raw materials. I look at things and figure out where do they need to shave? Where do they need to restructure contracts, negotiate? Do they need to let go of employees? Do they need to fire anybody? Do they need not to hire anymore? What's their fixed? What's their variable cost? How can they better determine whether they're going to have X amount of money for Y amount of supply every single month? These are the things that I do consistently. And again, you're getting loyalty from me. You don't have to worry about that. Usually I'm worried about the other person because you guys like to categorize us or myself. I'm not like everybody else and thinking we're just out here to spend or give you money at our best interest. And I'm not doing it I'm doing it for your best interest. I'm literally being serious. I kid you not. And you have a friend for the long term. You have somebody looking over your shoulder, not like creeping on your shoulder, of course not, but who will be there to take care of you, for somebody to fall on, a trust fall. I got you. Don't worry. I'll take care of you. You do what you need to do in your business. I'll keep fueling your business, even with more growth opportunity, whether it's through funding or in other ways. I'll be there for you. Don't worry about it. And getting the best amount that you need to get, that's also another thing you don't have to worry about. I did quite a lot of things today. A lot of people took their offers today, others that have been presented with it, others that will be presented with it, others that have been applying. It just depends on the service and what you need to leverage. Sometimes we can do a combination of them for better results. I'd get a personal credit card open with them first though. So that way, and this goes for every type of bank and every relationship, like Amex. If you guys are wondering about Amex, I'm going to get into that in a little bit. But get a personal credit card. If not more than one, okay. But one realistically is mostly what you'll need, and making sure you use it. But having enough on that limit is also another question. It's not always entirely that you have enough. It's just that you have it and that you can use enough. You may not have everything you want, but over time, if you increase your limit, that's even better. So it's not just simple as saying, hey, I got an account open with Chase, a Bank of America, Wells Fargo. I deposited $500 to $2,500 plus, if not $5,000 plus. Now there's some activity in there. Now I'm going to get a personal card. That's what you should start with, because a lot of these institutions will want to have you have a relationship, something in the door that shows the activity that you've been using this. And even when you get a limit increase, that says a lot more. You get other cards. You maybe didn't get a business card yet, but over time, if you could get 3 to 5 times, 2.5 to about 4.5 is what I see, or 5 times the amount that's on the personal side, of course we have to look at it. I can do a soft pull myself and or my team. Sometimes I have to delegate it so I can focus on other areas. But when I'm there, I'm looking at things, I'm reviewing it. So all of this stuff, having a personal credit card in the door, especially with like an Amex, I'll get into in a second, that is a huge advantage with any of this. And it's very self-explanatory, but it's when you start getting into the usage, it's when you start getting into how much of a limit and how much of a limit you can increase to. That's a whole different story, but that's what I'd begin with. So you can get a business credit card later, and you can potentially get a higher approval with a disclaimer there. Of course, everybody's different. Everybody has a different scenario. Just don't ever over leverage yourself with too many inquiries, hard inquiries. having more than 4 per credit bureau in the last 12 months, I would say, having, even with a lot of these to issue you more credit, more than 2 to 3 inquiries in the last 6 months, in the last 12 months. Sometimes to get the very, very best, no more than 2 to 3 inquiries per bureau in the last 24 months. You don't hear that often. And then others are going to want to see more than 24, 36, 48 plus months. And I know that's a little bit more harder to do. If you take care of your credit, though, you're in better position. But a lot of us take on our credit when we're building out our business, and I get how hard it is to try to keep that utilization down. And if you need to pay down a balance, I see it all the time. I've done it myself. I'll give you more information on how low we need to pay this down. If you paid it off completely, then the range gets higher of an approval amount. Here's what we can do, 25 to 50K to start. You're going to get closer to 35 to about 50K. Now, if you weren't to pay down that balance completely yet, we could potentially still work and move forward with it, but you're looking to get closer to 25 to 30K, more or less. So if you really needed closer to 50K, whether you got that or not, lower the limit. Make sure you can pay that down. Don't take off more than what you can chew. That's the point of this. You don't want to find yourself in a bind. Well, my business isn't generating revenue. I'm not getting enough income. I'm self-employed and it's not generating me income until another 4, 5, 6, 7 months down the road. And you're like, well, I have these cards I can't pay down. I'm having problems. You're going to miss late payments. You're going to have late payments, bankruptcies, foreclosures. What else do you have? And so you have to understand that a lot of that can be very, very complicated and a hassle for you, especially, when you can't repair that. It is very concrete. And now you have to wait more than 24 months to then be issued a business credit card and do these other things you're trying to do, especially at the 0% interest level. So after you apply for one, you can get another card within a 30-day grace period or a 30-day period. That's what Chase has. They have their 2 and 30 rule where you can apply for a second credit card within a 30-day period, a time period. So that's an advantage. That's a huge thing. There are other ones that can do it much faster, a 1 in 5, and I'll get into that in a second. But that's very helpful to have. Not always do you need to have multiple cards at once. If you start getting multiple things, well, for one, you need more, but it would also be a combination of maybe a charge card and a credit card at 0%, or you'd have to add a line of credit with a credit card, depending on where you go. And probably it's a personal loan as well, like with the Navy Federals of the world. And there are a few other ones. We use Navy Federal. I don't use it often, use it in the past, my family, my brother, for other reasons too, for homes and other purposes. But they come in handy when you need to. They're not always the most reliable though, to be honest, depending on how much you need though. So they can be the most go-to. A lot of the times though, I see in hard markets where the dollar only stretches so far and you need more, they're not always the most reliable, but they have been generating a lot more steam in this market than any other, because a lot of people's credit is shot down, or there's other ways that they need to get funding and they have to become somewhat more creative and they can't get approved at the higher tier banks. I see that a lot of the time. So I say here a substitute to Chase Bank is KeyBank. So we could do this where we go from now the secured cards, we built an established credit, or if you're already in the fair credit range or you're in the good, the great to excellent, that's a whole different viewpoint. But this can also be added on top of. So KeyBank is a great one that I've used. You can get a line of credit with the disclaimer here up to 50K. There's also their 0% interest card up to 50K. And so the two alone there, if you were to get maximum amount, 100,000 there to use. And a line of credit, you can use it for a lot of things, for variable, for inventory that fluctuates, things that come off on your shelf sooner rather than later. Too late, you need more. You need to liquidate. You can't. You have too much cash flow invested into this. You don't have enough people buying. You don't have, there's so much that can go wrong. You have to understand that a line of credit or a credit line on these credit cards, personal and or business, eventually just business, then you'll understand that using personal for expenses and for other reasons is really helpful. So KeyBank without any previous relationship. So that's a huge advantage. It's not like you have to have a seasoned LLC for 2+ years to do this, to do that. It does help you for sure, but you do not have to have any previous relationship with them. And so that's a key point. And they usually pull here, as I mentioned, and this is what it usually is from Equifax. KeyBank, they do have their 50K and 0% interest, as I mentioned, 50Ks in lines of credit, and there's more information to that, but I'll kind of go above that and we'll try to speed this through. So what I would do, and this can work for like a startup too with KeyBank, but what I would do though is I wouldn't even start off with something like KeyBank. I know they pull from Equifax a lot of the time you see, But with Experian polls, I would begin there and look at something like a Chase Bank. So then you can add on then top of that a Key Bank, but a Key Bank wouldn't be necessarily my second choice after the secured card route. And even in credit card stacking, you have to understand that if you don't have high leverage, or these institutions are not going to give you the max amount, we have to leverage what you already have on your personal credit. So I'll give you a few tips as we're going to close up here in about 10 minutes or so. Please give me that time. The other video you should have seen, it was a lot longer, and I don't think Instagram allows to download content like that. Maybe it changes, or maybe it has been. It just took forever to load the screen. But here I went into that a little bit. I'd work with Chase first and establish a personal credit card or more if you haven't, and begin there to get more over time. Leverage then getting into business credit cards. So the potential, let's say with Chase, with a lot of people, I normally see starting with 10K to 20K. I was within that range when I was first getting into a lot of this and leveraging my banking relationship primarily with Chase. And then I evolved into other institutions online as well. So you could do that eventually, and then even double the amount with your next card and get a limit increase as well. That would be helpful. Just depends on which one you are trying to do and where you are at that point. Everything is different depending on how you need to use the funds. Again, that's what it a lot of the times will come down to, and understanding when you need to use it. If you need it more in a short amount of time, what then do you need to do? So 10 to 20K, let's say, for example, your first time to then get another card or for double or so and jump. And that is very helpful to do, as I just mentioned seconds ago. 10 to 20K. Next time you get 25K to about 40K plus with these. So it's very helpful to do that. So after that, here's where I would look at American Express. Now, we can look at getting American Express with Chase there included, but I'll give you a few bits of details. And when we come to business credit card stacking, this is a little bit different, because I don't think I would leverage using American Express as the top of the 4 to 5 cards we go after first, unless you don't have other leverage points to go from other banks, or if you already had those established relationships and you perhaps ask for a limit increase or a hard pull on this side, and we're looking at a few things there. That's a little bit different. But a lot of the times, and how I've helped out people, leg was itchy for a second. But we can look at American Express, Amex next. That would be a good thing. And I've used American Express. It's very handy. Charge cards or 0% interest cards that have been exceeded that now. But with those, it gives you a lot of leverage. Charge cards, though, you just want to be careful that you're just not getting charge cards and not having enough revolving accounts. And these are just charge cards at the end of the day, that you're just using it up as much as you can and taking on a lump sum. And if you can't pay that back within the 30 days, or when you need to pay it back at the end of the month, you just took out so much. That can be very scary, and you can fall in a lot of debt. You can fall in bankruptcy. You can get yourself into a lot of problems. And the defaults, you don't want to cause any of those problems. Past default judgments in place. Don't want to get yourself into that situation and destroy the relationship with Amex. You don't want to already get into this thinking, well, I got a personal card. I'm going to turn this over into a business card somehow, and I'm going to take out all of this, liquidate all of this, and not tell Amex that I'm trying to do this with another card. And now you're becoming a little bit more shady, and you do not, especially with an Amex, you do not want to ruin that. That could be your go-to, especially with multiple products, the lines of credit as they took over Cabbage. You have the personal on the business side. And without getting into each and every one of them right now, let me continue with this though. So the best thing to do is, like some of the others in the top tier banks, not all, but have a previous established relationship with them. At the very least, there is no time frame of 1 year. If you just had something for 3 months, but you had a personal credit card, that's the premise of this, is having a card, getting to the point where then you could have asked for a limit increase, whether you did or not. But you're seeing a track record of history. You're seeing those accounts changing. You're seeing everything happening well. And so if you haven't had any problems with them and you've developed that history with at least one personal card with them, that'll be very helpful. And if not, I've seen approvals, and you don't want to do this. I told a client today, I asked them, do you have any previous relationship with American Express? No, not really. And they went into also what their other cards were. I got the understanding of what their highest card limit is and what their lowest is. And some of them I was like, this would be better than this. Capital One would be helpful to look at this better and base it off that instead of the Capital One, and try to build around a lot of that. Even if you had a higher limit there, it's just at a point you're going to plateau with trying to use and wanting to use those cards only for selective reasons, and you can get better cards out there that'll be helpful. So that's what you want to have, is have at least of a personal credit card open with them and not close. You don't want to be closing your account or accounts. That can do a lot more harm. And that's a whole other topic when we talk about credit repairing, and if we had to repair, even it's not justified. That's a whole different story. If it is justified, it's just, you got to understand how you use these funds. So if you don't have that, I see normal approvals between 25. I've even seen less than 2,500, but somewhere around 3K to about 4.5, if not 5,000. I've seen approvals if you do not have anything of a relationship with them. So that's why I don't recommend, if you're going to waste an Experian pull from them when you could have gone to Chase and you could have leveraged your other history and your credit, whether it is that much or not, but we could have done more like 10 to 20K. Why would you have gone to an Amex where they pulled Experian and they can pull TransUnion? They do a double pull a lot of the time. Now, you could put a hard stop on Experian, so they only pull on TransUnion, but it's become a lot harder in this market. And as people do that more consistently, they're going to figure that out even more. But there's that point of view, there's that angle, and then open things up over time, especially when you're trying to get loans. Like I see a lot of people when they come and apply, you have frozen credit. Can you please unfreeze your credit? They didn't even know, or they did. And it's just a quick call in, or it's a quick other way of deviating away from that. And sometimes you just can't do that because of other things that happen in life and marriage, and a lot of things that can happen that's just very unpredictable sometimes. And you just didn't know you were going to get yourself into that situation. And there's many more. So the Blue Cash and Blue Plus are best cards to go for. And this is on the Amex side, for 0% interest for 12 months. And there's other billing cycles for other cards as well that are similar to this. They are like Chase, where you can apply right away for another. But instead of doing the 2 in every 30-day rule, this one is a 1 in 5 rule that you have with them. So you can go for another card after those 5 days. Now, you don't normally want to stack 2 credit cards on top of one another, 0%. A lot of the times you see it being mixed with the charge card, platinum cards, gold, whatever you're going for. There's different ones out there, of course, and where you need to begin. I can start listing them all and going into all the benefits. But the point of it isn't that. The point of it is to make sure you have enough funds and not getting over here into this whole, now, oh, the rates are high, I didn't get the term that I wanted, and you're getting a cash advance, you're getting a merchant cash advance, a hybrid cash advance alternative, even if it's looking at all revenue coming into the business. At a point that makes sense, because you need to get more. I need it fast. I don't want to disrupt or ruin my relationship with my vendor or vendors and my suppliers. Oh my, I don't want that to happen. I don't want to them have to terminate the contract. They need this money. They need to see that this is in my account. You don't want to ruin those things. So it's better sometimes to go for those, and your ROI needs to be there. If your ROI for those advances are not going to exceed the repayment, that the repayment is likely already higher depending on your file, you may not justify it. So it's all about ROI, current margins, cash flow, operating, free cash flow, getting enough profits. How do you restructure all this? I help out people with as well. So those have a purpose for fueling new opportunities, current opportunities to generate more revenue. For stability, it can help. How's your cash flow? Sometimes the cash flow doesn't help when you take that. You have to account for another daily or a weekly repayment with those. Online bank term loans, you can or can't qualify. Too much documentation required. Not enough cash flow. I do analysis on a lot of this stuff, guys. Collateral, when you're looking at SBA loans, 85% collateralization, not their primary look. But if you are thin on collateral, you don't have enough assets on the personal side as well as on the business, they might just levy the personal side. But if you don't have enough, it makes it harder for them to justify getting you the type of loan. Because in the case of a default, in the case you can't make these payments, can they resell this into the market? I will be looking at this like a lender's point of view. If I become a lender, will I issue you money just because you said, well, 2021 I made money, but 2022 I made some of it or none of it. 2023 I'm back up opening and this. Yes. But there has to be a track record too. If you look at 12 months with bank statements, and this is a different service, and you have to understand that, and there's still a lot of uncertainty about what you're going to do if you put this money into this campaign, or if you put it into that project of inventory, you need to liquidate cash out of this. And if you don't have concrete numbers, it could vary day by day. It's not exactly fixed costs or fixed projects that you know what you're going to get out of it. Of course it makes it hard. And of course it makes it hard for you to justify. It's already a hard market as it is. And if the benefit exceeds the repayment and it's there, take a look at that. So those are the best to go for 0% interest and for 12 months. And I said the 1 in 5 day rule there to go for another card. Number 5. So Amex has an Experian and TransUnion double pull, as I said, so I won't cover all that right here and putting the freeze, but you have to be cautious of that. Amex usually accepts 720 plus credit, Experian credit, if not also on TransUnion for the most part. So if you don't have that, and I wouldn't say even 720, 700 sometimes can get you in the door. Sometimes even less than that I've seen approvals for, with less than a 680, 640 at times. But if you don't have enough of a track record, and if you don't have enough experience with them, if you don't have enough of this that you're generating, it makes it a lot harder to get approved with a lower credit score. So they'll just rely upon that. At a time, it was much harder to get that. I got in the door when it was that hard. Believe me, it's not as enticing as it is nowadays. So we'll be very happy for what you guys have, because even if it does require the good, great to excellent credit, they're giving you flexibility. Like you're in with American Express. It's so crazy how many times people go, well, I want an Amex. Well, you don't have this, you don't have that. What are you doing to get there? Well, I don't know. And I gotta know. Here's a diagnosis. Here's your credit. Here's what we need to focus on removing. Here's how much time we need to take on removing and disputing this process. Or you need to work on that for yourself to go from fair to good credit. What can you do within the next 30 to 60, 90 days? I always ask people that. What can you do in about the next 90 days? And this would then report due dates, closing dates. Can you pay this in before that? Have your credit jump back up. There's a lot of different things we can work on. It's just sometimes we're unaware of what we need to do and a lot of this. So 720, if not 725, I would usually recommend that, 725 and above. Of course, if you're in the 750, but 751 plus range, you're in a different category. That's going to help you get better approvals and better approval odds of going through and a lot more. And a lot of that is especially more so with charge cards, especially with the credit cards as well. I wouldn't want to discount that. It's more important too, especially with revolving credit. So they normally want you to have 3+ revolving trade lines on your account. And I can get into trade lines very in depth. Done a lot of this, helped out a lot of people get primary authorized user trade lines. If they had to buy trade lines, is it right or is it not at that point? Not always is it justified, but a lot of people want the quick shortcut. Stop finding a quick shortcut, guys. When you realize that there is no shortcuts, asking for all of these different EIN only, no doc business loans of 100,000, if not just 50K sometimes, but it just normally wouldn't work that way. Lines of credit cards, but EIN only, no doc loans, no PG. Like how, if you don't have the history or the track record? And even then it's remotely impossible, if not just very, very rare to get. You have to have high cash flow, profitability, enough on the business, on the personal assets. So forget about the whole no PG in this and the credit card having to no PG this. At a point when you get to that, then you can have better operation power to say, hey, I can get a no PG card. I have established enough trade credit. I have worked at it this way. And then potentially you go to a US bank and get no docs with no PG. You go to a different location. So a lot of that is just kind of fluff. So be cautious of what you get a lot of information from online. And a lot of people are a lot of the times bait and switching you so they can bring you into their ecosystem. I'm nothing like that. Never been like that. I didn't grow up with those morals. People out there pretend to be, and I look at documents, guys. I look at it all the time. So I'm not you know how they have the marketing head? I have to do a little bit of everything right now. And so I hope you're getting great value from this. And I'm very grateful and humble of you guys. I'm going to go probably lay down on a bed after this and recover from it. I don't even know how, because I'm so tired. And as an introvert, like this is going to be the case. I'll go shower. I did my workout this morning. I'm going to lay on my bed for a little bit, relax my mind, probably take a nap so hard because I can't even, like just trying to keep my eyes open, my cerebrum, I need to recalibrate it. So I like to rest. I like to separate myself. As introverts, if you know this, you would rather do that more than anything. And then give time to my family after that. They know my schedule. They know how I do things. So set the boundaries, not only in business, set the boundaries also in your personal life. There's a time and a place for everything. Don't rush into everything. Have gratitude, be humble, be patient. I've learned that over many years. And that's also not just from running businesses, but also helping out others in their businesses and the personal development. More than anything, your personal development. I'm not a guru, but work on reading more books. Read, but take action from what you read. Build the right habits, build the right routines, listen to podcasts, listen to influential information. When you need to take a break and watch that silly YouTube, TikTok video, yeah, but don't buy into the whole, I'm going to spend 20 hours now flipping like this, like our parents do, or whoever does. And at times it's okay. Other times you got to be very cautious of what goes on up here. You could be spending that time to increase your financial literacy, to sending those documents, but I got no time, Michael, I'm lazy. That's what's really being said, even though you didn't say it. And so again, a lot of this stuff, there's family reasons and obligations that get in the way and it's justified. Other times we just make an excuse for what we're trying to do. And we're really making an excuse for where our character is. All of it comes back to your character, not your reputation to uphold, whether it's there or not. The character of the person. The ego, stubbornness, the ignorance, the cockiness, arrogance. Do you have that? Do you not? If you do, I'm not saying I won't work with you, but let's leave that out the door. Don't affect me. Don't let it affect my team too, my energy and time, friction and resistance. I do this very simple. You don't have to worry about anything. When I do this for people, you literally do not have to worry about those things. So we're going to end up here in a little bit. I got a few more points to go through. So that you want to have. Other ones, especially like when you do personal loans and more, they're going to want to have at least 5 trade lines. Other ones would be okay with doing 2 revolving trade lines. And you have a mortgage of a year, or you have an LLC established business of 2+ years with 1 revolving trade line. And so it just depends on what you have. And those are things that I can discuss with you in time. It just depends on the credit cards that we go after. And if they give you more room for having more inquiries, that's a little bit different. And depending on the type of credit or depending on the type of service that we then go after. So here they're just making sure you don't have an Amex. They're making sure you don't have any kind of negative history with them, anything in the past. Again, like I said, they are not new account sensitive and really not inquiry sensitive, which is a huge bonus for you. So you can open up, I don't want to say start opening up so many accounts, but that is very helpful because new accounts hurt you really, really bad. There's so many people I declined today, and it's just Monday. Tomorrow, Wednesday, the rest of the week, I'm going to see it even more. And it happens every single month. And those that get by because whether they knew it or not, it's like they don't have all those new accounts. They don't have more than 4 to 6 in the last 12 months, 24 months. You're shopping around for a lot of new credit. And whether it's worked or not, you have to be very cautious of what you're getting involved with. But the inquiry sensitive part, it's not like the Chases. It's not like the Banks of America and some of these others as well, that you can have more inquiries in the last 6-12 months, which is helpful. Just don't run it up. Don't be that person, because once you start to do that, then it becomes harder to get issued other credit from other credit bureaus, and getting those limit increases, it becomes harder. And if they were to approve you, the limit increase wouldn't be as high. So there's a lot of that to understand there. This I said earlier, but I just want to reiterate. You can even apply for 2 cards normally in a day. They have their 1 in 5 rule. After 5 days, another card, a lot of the times you see. But usually you want to combine a charge card with a credit card, charge card, and like a 0% interest card. Not 2 credit cards at 0% interest and these other cards sometimes, but it's normally not the case. And what you want to be cautious of is asking for too much. If you start putting on the credit application like a projected revenue, if you don't have any revenue, it's not going to say it's going to decline you. Some of you go ahead into not only this, but other banks and other regionals and communities. When they're asking for income, you start to put a huge arbitrary number, or you put 0 because you don't want to feel like you're not going to have any money, or you just feel like, well, I'm not generating any. Why should I put anything there? Projected revenue is very helpful. But when you get to like an Amex and some of these cards, if it's anything over 35K, and I've seen it over 30K, they're going to want to show, you're going to want to have to show proof. Tax returns, we can verify this. A few other things, if they would have to ask that, if you're already a business and your business is in good standing as well. So Be very cautious and selective because they will run that and they'll do a manual review. So don't do it if you can't back it up. Just stay under that. And what I go into here is, let's say you were trying to get as close to 20,000 or 30,000. You might get 3 or 4 cards at 5,000 each to maximize that. If you got 15,000 on your first card with Amex, in another card you can get maybe a 15,000. That happens a lot of the times. That happened to me at a point. And then I started to increase and I started to get in the door much deeper. I already had Chase. I did it the way I had to do it, even without even knowing entirely. And then I got these other ones with like key banks and a few other ones. And then I have community. But there's quite a bit to evolve into. And those are just some. I have many more with higher banks as well, especially on the credit card stacking and getting access to over 100 to 200,000 plus. And that's something you build in time. That's what you build also with your personal credit. So that'll be very helpful. Sorry, I'm getting these notifications through my email on the top. I'm going to try to close up here soon, but I'll go to the questions in a moment. So the best overall approach to do this would be to go to a larger bank you have a relationship with already. That's where you want to start. Wells Fargo, Chase. Let me know in the comments what banking relationship or relationships do you have. And you don't have to get into the numbers. You don't have to get into the cards. If you feel like saying that, please do so on the actual banks, not the cards, what I meant. But if not, that's okay. I'll leave more information in the description to get started. The questionnaire is the best place to begin. So start with what you already have. That's your in the door. 2, 3, 4, 5 banks. Where are you? What's the highest? What's the oldest limit? What have you established more common ground with the relationship inside the door, in the branch, not in the branch, whether you can or can't go in? What do you have? And so it's so important to leverage that. That's why I leveraged Chase so hard many years ago, as when I started to figure out how to use business credit. And so I leveraged Chase for so long until going to other institutions. So that's the way you want to look at it. Or perhaps things change where you can't go back. There's closed accounts. You were bouncing checks or you're moving checks you shouldn't have moved. There are other ways and why they would deem to close your account, especially with Chase. Like, they're very sensitive to. If you didn't know this, I figured it out myself through my experiences as well as for others. Is you're moving and navigating too much money from other accounts, personal to business, or from business even to business, or you're doing too much activity that's not something that they want. So you have to be very cautious of where your money is being deposited, especially with the Chase and these higher tier banks. That's a quick pro tip right there. And there's more I can go into in that. And if you already have a personal credit card, as I said before, or more, and have experience using them, it's best to turn to them for help and then add some of the others. Each bank is different, but at least have a $500 amount deposited in the point of opening up the account, if not already in the account. As you're continuing in business and we see the activity, or they see the activity in that circumstance with those banks, they see you having a lower balance. If they start seeing you really going down under, they have to be cautious. And there's more that they look at. And in terms of private lending and a lot of this stuff, it could work a little bit different in different solutions and how we approve depending on what type of service it is. So a lot of it is different as well on that end, especially when it comes to like lump sums, not revolving credit. Obviously, the more the better, especially if you've been banking with them, and that can be higher. Other places would ideally want you to have more added. But if you're opening up a new account with somebody like Chase or so, then a $500 plus limit, Bank of America 500 plus, US Bank 500 plus, and then having over 500, I would say 1,000, if not. My point of reference, 2,500, and it's hard, I get, for a lot of people to have that money or want to even take that money and put it into account when they go, well, I need to pay these people. I'm going to make more if I put it here. That's just going to be sitting in my account for a little bit because they want to see it in my account. So you have to understand that moving money momentarily and then move it back, have to understand the activity of that and be cautious of what you do. 5,000 plus, I say even better. That's what I recommend. 10,000, like with other institutions, if you have 10,000 and if you have a $10,000 limit card that I didn't get into right now, but with like Amex, Chase, and those, the approvals are getting higher when you have that on the personal side. So it might not even fall between 10 to 20K. You might get more 20 to 30K on that circumstance, especially if it's your first card. So 10K is really what I would recommend once you build a personal credit card at that limit. And I wouldn't recommend doing it like 5K and 5K here, 25K here, spread over 4 to 5 cards. I would do it more where you have one card at 10,000 in a personal limit. Whether you got an increase for it, the increase would look a lot better than to say you have 3 to 4 cards at a low limit that you never put the increase on, that you could have put an increase on, but you never captivated on that opportunity. But having your credit out in so many different ways and you're not leveraging those cards can also hurt you. So having one card actually a lot of the times helps you more, and especially if it's a card that you're trying to get an entry point to then getting those business credit card approvals. Sometimes lower limits at a more amounts of cards can be helpful, especially if you're using it correctly and you're not overutilizing them. That shows that you can manage credit over different cards, and that's why a bigger card is helpful, because they give you a higher limit. How do you utilize that credit? How responsible are you? And how much can you tap into? And when do you pay that, even if it's revolving? And then here I just kind of go into, if you got into Chase before KeyBank, maybe Chase then KeyBank thereafter, but I would probably hold off on that, especially if we're doing credit card stacking, because they normally will pull from Equifax on the KeyBank side. Sometimes it varies geographical location and area. But at this point in the process for the pull in the credit bureau, and if you haven't opened an account, do the first $500 deposit inside to get a better access to 0% interest cards for 9-month billing cycles. Thereafter, you can submit for another card with the likes of Bank of America, since they also pull here from, not also, but they pull from TransUnion primarily. I've done that with them, and it's worked that way. Maybe they change things also because of the geographical location, but it's usually dependent on TransUnion is what I see, and that's very much set in stone for, as opposed to other banking institutions that can vary based on the location. So you're seeing how it's pulling from Experian, Equifax, TransUnion. Now, if they're not open to any open accounts, we can remove them, those hard inquiries, and remove them and repeat the process. Now we can do this with other cards. We can do this with other banks. Boom, another 3. Boom. Now you're getting to where you need to get to 100,000, all because of why you have good credit at this point, or you're leveraging somebody else's credit. You want 0% interest cards. You don't have the credit. You can't increase it fast enough. Get a credit partner, get a business credit partner more so with at least 10% ownership. Add them into the operating agreement. Add them in just to be a standby partner that can help just look good on paper. Now, what they're doing in the business, that's a whole different subject. And of course, if you have them as a percentage, they're going to want something in return, right? But what are they doing in the business? You got to question that. If they're asking for too much, that's a whole nother thing. So a lot of the times, 10% on that. Now, if you don't have a 10% partner, that's okay. Maybe you're 100%, or if not 10% and more, then maybe we go to personal loans. And if it's not a business partner, it's a friend or family, or they own their own business or they don't, then we can look at personal loans, personal lines of credit, and more. I'll go to the comments here. I have quick few points. I'm going to address a few other documents that I have. Please give me 5 minutes. I know it's 10 minutes. I want to cover this in great detail for you. Therefore, as I said, Bank of America, realistically go for 3 cards and do the same thing like with Chase. What I would recommend though is it's harder to get a third card, not necessarily an approval for, but the time it takes to get that, as well as doing it and getting in an amount that would be justifiable, not starting off with a lot less than your other 2 previous cards, because that'll end up happening. And so getting a third card really wouldn't be the direction to go into. It's one that you're likely not going to be using and it won't be enough of. So do the same thing with Chase, as I mentioned here, the $500 amount usually inside. Look to get a third one, but I found out that getting a third gives you very low limits, as I mentioned. It's not worth it if you really know you won't use it as frequently, and don't just open one just to have one open and they don't see you using their credit. And see, a lot of the times you won't even have to. When you need 50K, a lot of us think we need 50K to start a business or continue business. When you get into this and you're starting, you already have other obligations. If you look at the annual debt, there goes 24,000, and then you have the business credit cards, and now you have this money that goes out within a year, like with less than 10 months, with less than 5 months. A lot of the times I've seen it with lower limits. And so now you don't have enough for covering your expenses, your overhead, for this marketing campaign that you were trying to add 10 to 20,000, $30,000, $30,000, $30 cost per lead, cost per acquisitions, of course. Then we can talk about $30, but those are things you guys got to understand when it comes to being calculated and calculative. Yeah. Be very analytical. I'm not saying you have to be the most, but understand these things when you're trying to address getting credit and other things issued. The other way to go after this is to go for the two Chase cards and then go after the Amex 2 cards right after because of the pulls and what they'll go for. But it's also about where you are with the relationships with both, as well as what other things have you taken, if you've taken anything from them previously too. Quick tips. When you have a personal card from these banks at like, let's say a 10K minimum, this is what I already said, so I won't address this, but excuse me. There it is. It helps you get better approvals on the business side. But if less than that, it's fine. You'll have to begin somewhere. Approvals normally from the personal to the business, I say 3 times to 5 times. I've seen 2 times, if not matched. And it varies again based on your credit profile on a lot of that. So have higher limits, have higher usage. Older credit cards really help you. Having aged account, aged accounts. See, for somebody who doesn't talk much, and I spoke quite a bit earlier, I'm going to have to take a quick break after all this is done just to relax, or I'm not going to come back today. I'm just going to be done with it. But you have to begin somewhere and build that relationship in the door. It just depends on the credit report and the reports on a lot of this too. Before activating the card, and I said this earlier to the people and I gave them an extra amount, but on this, before activating that account or that card, I should say, or cards, check in with, this is one where you want to look at them reconsidering more so in terms of, can you get a higher limit? And you can go in, walk in. I would recommend, especially if you have a relationship with them, that would be best. And it's more relationship based than doing it online or over the phone. Others over the phone would be helpful to do as well, depending on that relationship, depending on if you can do it online instead and get those approvals. But hey, you call in. Hi, this is Michael. I've been a client in good standing with Chase, with you guys for some time now, going on like 7+ years. I've been good about using my personal credit card, especially my other ones. I have multiple now, and paying them off on time. My account activity, I've been using it very frequently, withdrawing, depositing, keeping enough of a balance, starting in any daily bank balances in this. I was wondering if I could be reconsidered to get a little bit more, and I have projects that I need to finish. I have inventory that I need to add an additional 5 to 10K. I was going to liquidate about 2,500 of that. So I'll have an additional amount. So realistically, somewhere between 5,000 to about 8,000 to 9,000 I would need. And I'm not asking for much, but this would be helpful for my business to sustain its growth over the next 90 days. And if I didn't have that, I would likely fall back about $20,000 to $30,000 in revenue. I would lose about 5 to 10 clients, potentially go bankrupt because it would be so hard to resurface. And so see how at that point you're giving it to them, you're sticking it to them, not in a bad way, but you're trying to get that. And I've seen those increases. It's happened to me plenty of times, but with different relationships, of course, not always with the same bank. Of course, you don't want to get always to a point where you're just continuing to leverage that and think that that's okay to do consistently. But that can be a bump up, and you can see increases. Like for me, 5K to 10K, I got a 10K increase on my side. And so that's something that could be very helpful to do. And you can get a bump up from there. And I give you just a little bit of a quick example here. Next steps. All that's next is to open the account or accounts. You need to go after the secured and unsecured cards. Remember, we went to secured cards to unsecured cards. That's how we started this. And if you were at a different point, of course, that's a whole different process. If you want to add multiple business credit cards on top of another to get 4 to 5 plus cards or so at a time, we could look at going to top tier banks first and then work backwards from there. And you'll want to have 700 plus credit on all 3 consumer credit bureaus at this point. Have a credit partner who has at least 10% ownership of the business, or another business owner who has that credit that's saying, hey, I'm willing to help you get access to this money that they can also liquidate the cash out of, help you deposit, put it into your account, help you use that money for a rainy day emergency funds. Get multiple credit partners that can help you add on, have different board members, whatever you're using the money for, have different partnerships. That really is going to help you, unless then you leverage your 401k IRA. We can do a rollover into working capital. There are a few other instances. So 4 to 5 cards with a lot of this, multiple business credit card stacking program, and looking at going to top tier banks first a lot of the times, because your ROI would be much more immense, as well as the providers and what we're doing. It would be most appropriate to work with the top tier banks first and then work our way down. Sometimes a community credit union, depending on where you are and how established you are on your credit side would be appropriate, but it wouldn't always be the first place to turn to. So we would do this where, let's say we go to a Chase Bank first, 10K to 20K, Bank of America, another 10 to 20K, if not 20 to 30K, more or less. Then we can try maybe a PNC Bank, and then we go to a Truist Bank if possible. And there's other plays, other combinations that we can add, but like a Truist Bank or some others like a Key Bank, we can add multiple products with one pull. Truist, 3 or more, 2 or more, 1 is fine. You have to look at it as, what can you get? Credit lines. You can get credit cards on top of that. Once you get credit cards, then you go in for a credit line. No matter if it's not 50,000, if it's less, okay, but it's still very a few other locations in case we had to, and we can rebuild the process in about 12 to 15, if not less, 12 to 15 months, if not less than that, 6+ months, just depending on where we are at that point. But sometimes it's a little bit different on that end, and then asking for increases and limits. So I went into that here very quickly. I covered a little bit about the bad credit. I'm not going to get into all the different cards here, but things like revenue-based business cards, Credit One Platinum cards, the Discover Your Secured card. That's one to begin with, the Platinum Secured card. Go to Capital One. There are a few other instances that we can work with, but it's really rebuilding your business credit at that point. And then here I go into adding primary trade lines is something else that you can look at, especially if you have no credit history, or if you're trying to build those trade lines and have enough revolving credit, that can also help you. So adding these can boost your credit score, and having these accounts added. So ones to turn to are like Credit Strong Self, Talmo Credit, Stable One, Grain, Chime. And then at a point, if we had to purchase trade lines, what can we then do? But first of all, we want to work with adding organic accounts and building up from there. Extra notes, I just covered what a trade line is and a little bit more into detail on a lot of this, what it would do to affect different credit bureaus and installment loans, open accounts, revolving accounts, what to look for in a lot of this. Now, a quick mention here on my fast track. I know we're over time, way over it, but this is something else that we can work with. Normally, if it's less than 670, there's a different point of view. But 670 and above on all 3 consumer credit bureaus would normally put you on our fast track. But if you didn't have that, of course, we would have to look at what you have previously and how to get to 670 and above, have that good credit score range. But this is one where we can look at, let's say we were able to add organic accounts, and I've done this and I've helped out a lot of people with. At that point, when you're building that in that limit capacity, over time, what you want to do is get credit limit increases. And you always want to start with your oldest credit card first. That's what I did. You want to begin with that. Normally, the oldest credit card is usually the one that has a higher limit, and or you're working your way to get those, but that's normally the case with most of this. But even if it's not, it's your oldest credit card, and each history matters tremendously when it comes to this. In this market, 2+ years, but 4+ years is really, really the thing that we want a lot of the time to look at. 2+ years can get you in the door, 1+ year in some cases, but 4+ years is really like, okay, they have those accounts, that revolving credit history, that is all there. So the next point, and I've done this, ask and always ask the creditor to match the limit of your largest reporting account. In this case, we're talking about the card on that account. If you're requesting an increase on your largest account, then ask them to at least double your limit up to 25,000 max. You start going over that, more paperwork, more things, and you're getting out of your boundaries, even if it's not the paperwork, and those approvals normally wouldn't happen. And so that's what you want to do. Request that. I know with like Capital One Spark Card, sometimes people want to close their accounts because they don't use it. They don't use their lower limits. And if you ask for an increase and they couldn't get you $10,000 to $20,000 plus off of something low enough, sometimes you close it and it's beneficial too. When you have all these other accounts already opened, when you have these higher limits, there's no use for that. But at the same time, I wouldn't close it. Sometimes something comes up. But when it's accounting towards your overall credit, that can factor into to the approval. So I can see why those would be closed sometimes. But having that is purposeful depending on where you are in the parts of the process. And I don't always recommend to close things. Of course, you don't want to always do that. Normally don't want to get into closing accounts. But yeah, I get into all this. There's more details on this and I can share a lot more of this with you in time. These are some pro tips that I've used that I've helped out many people with that are going to be very helpful. Let me make sure I covered everything. Here's just some quick pointers on what top tier banks would look at in terms of FICO score or scores, depending on where they pull from. To get the best from those banks that aren't sharing this with you, a lot of the times less than 20% utilization on personal accounts, on open personal accounts in the last 6 months. Less than 20% utilization on every single revolving personal account. Now, there are other points when we're doing credit card stacking, and there's flexibility where we don't want you to go over 40% utilization on all revolving accounts. So there's a little bit of a difference there. I'm not going to get into all the specifics on what we're looking for in terms of that end. I can cover that more with you in time on each revolving accounts and the late payment history if there is, any season major bank card trade line limits. A lot of the times they want 5,000 and above to do credit card stacking, and there's a few contingencies with those, and the actual look at if you had this on this account, if we had that, would we factor it in? But I'm going to go to the comments here for a quick minute. Let me make sure I covered everything first. Okay, so it looks like I have covered everything. I don't want to continue to recap a lot of this, or even if I didn't, just make sure that if you're going from secured to turn that unsecured, if you're not going from the secured path, you're starting unsecured, which a lot of us should start off with, is best, but not all of us get all that leisure or the pleasure to do that. Then you can build up over time, and depending on where you are in your file and where you need to move up to, there are different ways to look at that. You're looking at buying a primary home, primary residence. I'm not sure if you're still in here, but 600K house. There's more factors than just that, possibly. So without knowing and digging up more, okay, there, yeah. Appreciate you. Thank you for the hearts. Thank you guys for the likes. I don't always ask to share the room, but if you did, or if you haven't, that's okay. If you feel comfortable doing that, please do so. Appreciate you guys. Thank you very much. Okay. That would be helpful, but do you have a relationship with Amex already? If you're going for a gold, I would imagine, but I just want to make sure to ask because, like I said earlier, you want to have that in the door, even making up for the fact that you have those user trade lines, authentic or not. You have to be careful of going into something thinking that you have enough of accounts or there's enough H history when they're looking at also other data points. Everything is based off of experience, especially with like an Amex. If you have any kind of in the door with their personal credit card side, and in time that's the Amex Gold you wanted to build into, then that could potentially happen. Have you communicated with them? That's what I would do. It's like that, and anything to do with any kind of personal credit bureaus as well. That's where I would turn to first, looking at the formation of your LLC, looking at the formation of where you got that business address, and a lot of these other things is where I would turn to. I would say fueling an idea. I would never say just have an idea sitting there that you're unsure about day to day or what it would look like month over month. Have a concrete plan, as in like hypothetical uh, profitability and cash flow assumptions. You guys want to always start off with if I had X amount, Y amount, Z return. So always understanding the income and the expenses, what you're subtracting from, where you're adding to, what could be your multiplier? What's your dividend? What's your divisor? What's the common denominator when you are dividing? So what do you see a common trend? So you have to account for fixed and variable costs. And if you just have an idea and it's all over the place, you're unsure about where the team's going to be in about a month or two, you're going to have to relieve people. Your revenue will then drop. It's not a good idea to take any kind of money to just using it, or I would just say even a temporary short-term solution, even if it is just primarily used for short-term and you need to pay it back quicker, like always have a long-term solution based upon that money. And if not, you're not preparing for more months and you're more years ahead, like that's usually going to hurt a lot of people when it comes to having enough operating cash flow, free cash flow, and preparing for any sudden expenses and things that arise. Yeah, that's where I would start then. I would get in the door because limits are going to be approvals of a lot less. I've seen on both credit card, charge cards. You could give it a try, but uh, that at that point, I would always build something on the personal side first. For fix and flips, I'm not going to get in. I'm not a mortgage officer, or I can get into homes, of course, my experience and others, but I won't get into that subject right now. And I'm about to end the video. But for anything fix and flip related, or you got to use a home equity line of credit, home equity loan, or how to set up this underneath an LLC, like those are different things. I won't get too much into right now on like a primary home and you're trying to buy a home and where should you turn to. And that's not what I'm going to get into in this video. But for another time, perhaps. And I'm going to end this here in a second. I got to get going. Let's see. Any more questions? We'll do 30 more seconds. Yeah, and I didn't say this, but I briefly touched upon it. But I made a video too on the no doc loans, lines of credit, more so credit cards and lines of credit, and two specific banks that you can turn to that can do a combination of lines of credit and credit cards. And sometimes these things change. So in our economy where we are now, they can pull these off. Like people are taking advantage of them because of a hard market, but they can just pull away from them very quickly. So sometimes these things change over time and when you watch them. But those are there to take a look at. I'm going to try to leave that content for you down below in the description. So I apologize if I missed anybody. Hopefully I got to everybody today. This video will be up on YouTube as a replay. And if you're watching this from YouTube, here you are. All information, if you're not on YouTube, in the bio, down below in the description if on YouTube. And the questionnaire form would be the best place to begin with. All resources are there. Get that questionnaire filled out. And if you have, I'll get back to you in time. And if I did, you should know that by now, or I'll lightly or give you a reminder. I'm not ever going to pressure you or be pushy. Not like that. But please don't have me chasing. I don't like that. I don't like people like that act like maybe they're acting like a cheetah chasing a gazelle, or they become the gazelle. They've been the gazelle the whole time, and the cheetah is trying to, like, no, I'm not a cheetah. I'm not saying that, but like, come on, just don't waste my energy and time. I'm a very nice person. Again, I'm very loyal, but nobody needs to be putting up with that. That makes sense. So that's all for now. Appreciate you. Thank you for tuning in. Keep that attitude, keep that right effort in, have those characteristics that are going to drive a lot of the things you do in your business, on your health, on your relationships, in your wealth, and in many more areas. Appreciate you all. All information in the description and in the bio. And one last look just to make sure I didn't miss anything. Sometimes I do. Okay. So that will then conclude everything, and I will leave it there. If you haven't subscribed, please go ahead and do so. Click that bell notification icon so you do not miss any future content I'll be coming out with. And if you found value from it, please give it a thumbs up, share it with others who you feel will find value from it. And that is all for now. Take care.